Hello, everyone. Welcome to our live stream. So, today we're going to talk about buying your first Airbnb property. There's a few things that we want to cover today. And one of the first things that I like to cover is uh, determining a strategy for your Airbnb purchase. We're going to talk about financing options for Airbnbs, different strategies to use for financing, different strategies to help you create a real estate portfolio over time, and essentially help you create a portfolio of properties that don't require you to give 20-25% down payment every time you want to purchase a, a property. So the goal of today is I want to give you enough information for you to be able to create a strategy for your real estate portfolio, for investing in real estate, then also help you at least, at the very least, guide you in the right direction when buying South Florida Airbnbs. It's very market specific what we're going to cover today. It's not necessarily, or whatever we cover today doesn't necessarily apply for other markets, right? For those of you who don't know me, my name is Mario, and I have been your local real estate expert since 2006. And the information that I bring you, I like it to be very market specific, very driven to the South Florida market. So, uh, with that, with that being said, the very first thing that you must identify as your um, as your journey to investing in real estate is what type of investor you will be, right? We want to know if you are going to invest in real estate in medium to long term. We want to know if you're going to be in the market only for short-term rentals, long-term rentals. So these are questions that at the very start, very beginning of our pre-approval process of our journey to find you your first Airbnb, we have to be able to answer these questions, right? So, number one, right, we want to know what type of investor you will be. What's the strategy? Are we looking for cash flow versus growth? Are we looking for a property that just pays itself, manages itself? You don't have to do much, or are we looking for a property that you can maybe take on a small project for renovation? Are you going to be hands-on with the management? Is this a property that you don't mind coming in, a few hours a week, making sure the property's clean, everything's up to date? That's essentially one of the very first questions that you have to determine. What is your strategy going to be? Personally, I don't like to take on any flips, any short-term investments in real estate. I like the I like the investing in real estate strategy that's long term, right? I'm looking at properties that I can hold for a few years at a time. I'm not looking for properties that I can buy and sell within 2 years. And the reason for that is I I'm looking to create wealth. I'm not looking to pay taxes. Every time that you purchase a property and you sell within 2 years, there's a capital gains tax that you have to pay. You have closing costs, you have other fees that you have to pay. So essentially, it doesn't flipping properties doesn't yield you the most or the best possible uh, income, right? So my strategy is medium to long term. I'm looking to buy properties and hold them for the long term. I'm not looking to flip properties, and the reason for that is essentially tax savings, right? Now, you may be in the market for buying properties in the short term, and depending on that short term, or depending on that strategy, will determine whether the short term rentals is something that makes sense for you. So, number one is identifying your investment strategy. Are you in the wealth building stage of your life? Wealth building meaning you're just accumulating assets, or are you in the stage where you just want cash flow? One more thing to note there on the cash flow side is that if you take on any rental income now, for example, myself, um, you have to pay taxes on that. So I'm not looking, or I'm not particularly interested in taking on rental income because of the tax implications that I have. Now, I do want to own as many properties as I possibly can because of the tax breaks, right? We get a bunch of deductions. We can write things off in our taxes. We get breaks from our taxable income and so forth. So it's important that we're able to we're able to take advantage of those tax breaks by owning properties, right? And if I'm flipping properties constantly, if I'm constantly getting rid of these properties, there's no way for me to build wealth. I have to constantly pay taxes. So it's not something I'm looking to do. You have to determine that for yourself, right? The next thing that we're looking to do for when you're buying your first Airbnb property is identifying the market that you're going to buy in. This is very important and possibly one of the most, if not the most important step in the process. It identifying the market essentially means that we have to know the median income of this place. We have to know if this is somewhere that people consistently vacation to. I want to know if there's any, if the city ordinances or the the local government has any blocks against short-term rentals. I also want to know anything that has to do with requirements for licensing, right? So when you're buying your short-term rental property, it's not the same as when you're buying a property to rent long term in terms of licensing and what qualifications you require and so forth. So when you're buying a property for long-term rentals, meaning at least 6 months and more, you don't need to apply with the county or with the city for any licensing. You're essentially just buy the property and you can rent it out and off you go. If you buy short-term rentals in South Florida, you have to apply for a short-term rental license. And depending on the county, there's different requirements that you have. So if you apply in Miami-Dade County, not only do you have to apply with the county, you also have to go through the application process for the city and you for that particular city. And you have to also renew this license every year. You have to file an LLC, you have to register it with the state. So there's a few steps that you have to take before you can actually do short-term rentals. Now, this is something that your real estate agent or your real estate broker should be able to walk you through. And it's, we shouldn't put it on their shoulders or on our shoulders to tell you exactly what it is that's required. That's up to the city to tell you the requirements and so forth. But at the very least, we have to be able to tell you if that particular city or town that you're buying in allows Airbnbs. For example, Daytona Beach Shores, beautiful beachfront community, they don't allow any new applications for short-term rentals. Sure, you can, if you buy a property or if you go, buy property to rent long-term, you can do that. There's some restrictions on that. But if you're looking for short-term rentals on Airbnbs, Vrbo, etc., you can't apply for that license. You won't be able to. And this is something that your agent has to be able to, at the very least, point out the areas that you can and cannot buy short-term rentals. So identifying the market is very, very important. It's one of the things that we look out for. In addition to identifying the market, we also want to take into consideration what kind of property insurance we're going to be required. Are we going to only need to have protection against wind and fire? Are we also going to need a liability insurance? What additional insurance requirements are for Airbnb? Now, to be able to answer that question, we've brought on our trusted insurance agent, Gerry Rivas, and he is with John Galt Insurance. He's going to be able to give you the right answer for any insurance questions that you may have. Jerry's been an insurance agent for about 10 years, probably a little bit more. We trust him with most of our policies. He handles some of my personal policies as well. And Gerry, a couple of questions that we have for you is, when we're buying Airbnb properties, what should we be looking out for, or what additional requirements are there for that type of property?
Yeah, hey Mario. One of the main
You,
things. Oh, can you hear me now? Hello? Can you hear me? Hey, Mario?
Hey, man. All right. Looks like you're breaking in and out. Did you hear my question?
Yeah, yeah, I did, I did.
Okay. So
Yeah,
let's
so
what are we looking for?
one of the main things you're looking for really when it comes for insurance, if you're in Broward, we're just looking for something in good condition, which means it's standing. If you need to fix a couple things, that's no problem. If we're in Miami-Dade, though, we are looking just like if you were buying a home, we will be needing inspections because the insurance market is totally different. So we do need some extra details and to do more shopping for that. So it's not as easy of a market.
Gotcha. Now, one of the questions that we get often is, if there's any illegal structures on the property that we're buying, is that property insurable?
Yeah, absolutely. Even as an insurance agent, I would say once you really get past one property, you should consider putting them into LLCs. That's just an additional form of protection for the client. But definitely, because this is kind of a business, we would recommend it under LLC, and it's no problem for the insurance companies to insure it that way.
Okay. So the idea of putting in them on the LLCs is to what? To divide the assets?
I didn't get that one. You're coming in a little staticky.
Yep. So the idea of putting them into an LLC, is it to divide the assets and protect the client's portfolio?
Yeah, so the idea of putting it on into an LLC, I would confirm with a real estate attorney, but it really just separates yourself and puts another barrier where if something happens at one property, it doesn't affect all of them. It just affects that one. And usually, if something needs to happen, you either sell it, you get rid of it. If insurance isn't enough, but it does, it doesn't allow whoever's trying to sue you to go after everything. It's just that one.
Yeah. So when you're buying your first Airbnb property, it's not it's probably something you're not worried about since it's your very first one, right? You're better off putting this property under your personal name, being
Hmm.
able to get potentially a first time home buyer loan on this property. You may be able to do a primary home residence purchase and put it under your name, where you don't have to worry about going into LLCs and so forth.
Right.
And once you get into two, three, four plus properties in your portfolio, you may want to think about dividing those up into LLCs or maybe changing the title. Again, not legal advice. You have to contact or speak to a CPA or a real estate attorney for that. But what I do, the strategy that I have is I've owned my first few properties under my personal name so that I can get the very best terms for financing. And then from there on out, I will begin owning properties under LLCs, dividing them up. Now, in the state of Florida, funny enough, is a lot of people have this misconception that if you own a property under an LLC, that you're protected legally by all in all fronts, and that's not necessarily true. Again, seek legal advice from your real estate advisor, but your real estate attorney. But in the state of Florida, single member LLCs are often ruled to be single or a person.
Right.
What that means is essentially if you get sued and your properties are under single member LLCs, those properties may be considered your personal assets, and you may not have the protection that you think you have. But that's more a little bit further down the line for investors that have multiple properties. Focusing on strategies for buying your first Airbnb. A couple of things I want to mention, right? So number one, obviously determine your investment strategy. We want to know if you're medium to long term, etc. Second is we want to know which market are you going into. Now, what I'm looking for in identifying the markets is, are there hotels there? Is this somewhere that people want to vacation to? Like, what, what is there in the vicinity that people would want to travel to the area? Now, the reason why I like looking at the amount of hotels in the area is that those corporations have spent millions of dollars doing market research in those areas. So I know if there's 10 hotels in the area, there's a reason for that, right? So that's a good starting point for me. And then from there, I check, city ordinances, what are the laws and so forth. So once we have that checked out, then we want to know, right? So we have the area, we have the strategy. We want to know now what type of property you will be buying, because knowing the type of property will determine the type of financing that you're able to get. It'll determine the strategy going forward. And it'll also help you kind of map what the next few steps are for buying your second, third, fourth property down the line. So in terms of property type, we have condos, single family residences or townhouses, or multifamily. Now, out of those, out of those three, I particularly like the most the multifamily or the single family residences outside of HOAs. And I often look for properties that have new roof. It's a big thing. And
Yeah.
hurricane shutters, not so much, because I can essentially put those in myself. But in terms of hurricane protection and lowering insurance costs and so forth, Jerry, what are some things that we should be looking out for when we're looking at these properties to minimize the cost of insurance?
Sure. So the to your point, a new roof is definitely something that a lot of insurance companies nowadays are looking at. Um, the good thing when it comes to insuring for Airbnb or these short-term rentals, a lot of the companies are looking at the property as a business, as an investment. So they know you as the owner, you're going to take care of it, right? Because the only way you're going to make money is by having people constantly going in there. So it should be a good property, and it should be well maintained. Really, what we're looking at as far as pricing is where it's located. So the further east you are, if you're on the East Coast here, if you're east of I-95, it's typically a little bit more expensive. If you have water behind your home, it's a little bit more expensive. Um, and the bigger the home is, because the bigger it is, the more it costs to replace nowadays. Those are the main two factors um, in pretty much most of the state. Now, if you're in Miami-Dade County, again, we do need those inspections, so there it does get a lot more specific to your point. If you have the opening protection credit, which is anything impact windows, shutters. We're also looking at the main 4 points: electrical system, water system, and the HVAC. If those have been updated and are in good condition, if you're in Miami-Dade and the home is, it was built in the 50s and there really hasn't been any updates, it's going to be a lot more expensive to insure than it would a 1950 home in Broward. It's just the type of risk because of the area and what's been going on.
Okay. Uh, Jerry, I think your mic is coming in a little bit loud and staticky. Maybe lower it a little bit. Maybe the gain may be a little bit high.
Okay,
So
sure.
now, your typical, I want to say, first-time home buyer home. One of the house hacks or financing hacks that we have used for our clients in the past is, you know, as a first-time home buyer, you have access to an FHA loan. You're only required to give 3.5% down for the purchase of a single-family residence or a townhouse. Same thing for multifamily. So as a first-time home buyer, if you decided you want to go into the real estate investment field, I I think that buying your first home as a multifamily should be the absolute best first purchase you can get if you're looking to do that, right? And again, this goes back to determining what the goals, what the strategy is for yourself for investing in real estate. The reason being that if you buy a if you buy a multifamily, let's say a 2 unit property, you're able
Mm-hmm.
to get, as a first time home buyer, first purchase, you're able to get access to financing for multifamily with just 3.5% down, as opposed to if you were buying that property for investment or as a second home and so forth. Multifamilies require at least 15% down with conventional loans. So if you're looking to keep as much money in your pocket, if you're looking to come out of pocket the least, but still be able to purchase your first home and at the same time be able to purchase a real estate investment property, multifamily is the way to go, right? So when it comes to buying your first property as a condo, now that changes the strategy a little bit because with FHA in South Florida, you really don't have access to financing condos. You're very limited to the amount of condos that are FHA approved in South Florida. So not only does the buyer have to qualify for the loan, but the condos themselves have to qualify for the loan. So that'll be the biggest hurdle when you're trying to get access to an FHA loan and buy a condo. So what we recommend in that case would be that instead of doing an FHA loan for a condo, we do a conventional mortgage, 5% down, and now we have a list of properties that qualify for financing. And with that list of properties, we're essentially able to go to the client and say, these are the buildings that qualify. These require only 5% down. Now, in some cases, we can do 3% down conventional, but it depends on the income limit of the areas. Conventional has limits on income and so forth, depending on the zip code. But assume 5% to buy your first property condo. Now, going to be a little bit difficult to Airbnb that property as your first. Typically, if you're buying a one bedroom, it's going to be hard. Remember, if you're buying it as a primary residence, you have to live in the property. You can't buy the property and immediately rent it out on Airbnb. So the point being that if the goal is to start very small with a 1-1 condo, as you're buying properties going forward, as long as you're buying an upgrade on paper, what we call a superior property, meaning that if you first bought a 1-bedroom property, but now you're looking to buy a 2-bedroom property, you can buy that upgraded property with just 5% down. We don't require that you give 25% down to buy that second property because on paper it's an upgrade. So one of the hurdles that I recently come across on a condo, Gerry, maybe you can shine some light on this, was the condo did not have enough flood insurance coverage. So in Florida, condo laws say that the condos must provide flood insurance if the condo is in a flood zone, and the condo must provide structure and roof insurance. It's the law. You can't go around it. Now, can you just kind of chime in, Gerry, on the insurance requirements when we're financing a condo?
Sure. The and this goes for all the whether it's going to be a primary or an investment. We can definitely find you the insurance that you need, that the lenders accept. We specialize in homeowners insurance specifically, is what I do at our company. So it's nothing that's impossible. There's no wording that has to be added. I mean, we know exactly what the lenders need for underwriting, so it gets approved. On the flood part, it is always a little bit more challenging. Sometimes we have clients complain like, "Hey, I'm on the fourth floor, but I need flood insurance for a condo." Like, not get into specifics. Yes, that sometimes you do need it. It's usually not as expensive. It's not worth the argument, but it is something in addition that we can add, because if something were to happen to the building, what happens is, because of the peril of flood, your flood insurance will activate and start, giving you the money you need to fix it up. Once the building is in its full structure, meaning just the walls and concrete floor, then your flood insurance policy would give you what you need to build it back how it looks on the inside. The association's responsible for the outside. You got to cover what's on the inside. So sometimes what happens is the bank underwriting team says, "Look, there's not enough insurance for this. We're letting you buy this for, let's say, 200,000 or 100,000 to make it easy." But the building's flood is, let's say, $1 million for a building, so they only have a couple 10,000, 20,000 per unit to fix up. That'll leave you an empty square, pretty much. So that flood policy will come in, meet your underwriting guidelines for the lenders, and it's smooth and easy. Again, I know it doesn't make people happy to spend more money on buying something, but it's just not worth the argument. Now, Mario, when it comes to the financing part, what are like some examples? Because I have people ask all the time, hey, I want to start investing, but I'm thinking about an FHA loan, right? Because that's just what everybody hears. What are the limitations when it comes to like condos versus a home?
Yeah. So when you're buying any condo in South Florida, you the condos have to qualify for financing. So we look at their budgets, we look at their master insurance policies, and we look whether they are in court litigation, etc. So there's two levels or two entities essentially that have to qualify: the person and the actual condo.
Okay.
In Broward and Miami-Dade, there's only about 5 or 6 condos in each of the counties that qualify for FHA. We have a list of those. If you guys want them, uh, just shoot me a text and I'll send them over to you. But the point is, there's not a lot of FHA approved condos. So we have alternative options, and those are financing condos with conventional 5% down. And we actually have a pretty cool niche product that for condos that don't have enough reserves, like they're not saving enough money, we actually have a product that allows you to finance those condos with 10% down, where your typical bank is asking you for 25%.
Right.
So if you have someone that's buying their first property and they want a condo, I strongly advise against trying to find an FHA condo. It just doesn't apply to the South Florida market. If you Google it, Google will tell you you can buy FHA condos with FHA, and different markets up north, they're a little bit different than the South Florida market. So essentially, when my advice would be, when you're buying South Florida condos, you just do not focus on FHA. It's not a good option, or it's not a good route to take. Sometimes we get the realtors or some realtors or some clients that said, hey, my other lenders said we can do a spot FHA approval on this condo and they can get me approved. I've I've been in the market since 2006. I have yet to see a spot FHA approval work. It's a thing of the past. It doesn't. It's a waste of time. Don't do it. Focus on getting approved for conventional 5% down. I can give you a list of condos that qualify, and off you go. So once you buy your first condo, you have to make sure, going back to Airbnb, before you buy that condo, you have to make sure that the condo allows short-term
Right.
rentals. A lot of these condos that were built before, before any of us had any idea what Airbnb was going to be, the laws of the condos say that you cannot have, or you cannot operate as a transient. That's a technical word. Essentially, it's a Airbnb. You cannot operate as a short-term rental. You have to operate at a minimum of, or minimum lease days, 30 days, for example. So going into these condos, you have to understand that not every condo is going to be Airbnb friendly. Not every condo is going to allow you to essentially rent the property, on a daily at a daily rate or anything like
Right.
that. You have to really know the market. You have to do your research with alongside your agent, and this is something where your agent and yourself, your mortgage broker and so forth, has to be informed enough for you to be able to pursue the right property without wasting your time. So once you've decided you want to buy your first property, Airbnb as a condo, keep in mind, if you want to do it as a first time home buyer with minimum down payment, you have to make it your primary residence at the very least for the short term, right? So you're expected to live in that property. Don't buy the property as a first time home buyer and immediately just put it on the market for rent. Don't do that. That's not the way to go. So now that so we've talked about buying your first Airbnb property as a condo. We talked about, what the best scenario would be, buying as a first time home buyer, which in my opinion is buying a multifamily with FHA. So once you've identified that property, the very next step is, or maybe as part of the process, you have to be able to create and have your management team before you close on the property. It's extremely important that you guys do this. Do not wait to close to then figure out whether you'd want to take on a remodeling project, whether you even have the time to do so or the budget. You want to know who your pool maintenance person is going to be, who's cutting your lawn, who's replacing the appliances, who's doing the patchwork, who's doing all of that stuff on your property. And this needs to be done before you enter or before you close on the property. Immediately, a moment you go into contract, I would say once you have the area, start interviewing for this. Start calling lawn companies, start calling project management, property management personnel, and get them on staff, right? If and one of the most important factors for Airbnb is getting a very, very good cleaning crew. So your cleaning crew is going to, they're essentially going to mini manage your property. These are the people that are going in there, when somebody leaves, and they're telling you what's wrong with the property, what needs to be fixed, who needs to be called, and so forth. And these cleaning people have to be very good to the point where they're not missing the obvious, right? You want to get these people hired as you're leading up to closing, so that they're ready to go immediately. And my advice would be, don't try to underpay your cleaning person. If you have somebody, if you have a cleaning crew that's doing a good job, never cut their pay. As a matter of fact, you should increase their pay if they're that good. If you need to cut any price or any fees to break even, maybe on an off season or something like that, I would say cut your rental rate. Don't cut the cleaning crew fee. So, in terms of should we add, Gerry, like any liability insurance for to cover, like you know our vendors, people like cleaning crew, the lawn? Like, should we have additional insurance for something like that?
Yeah, so to your point, especially with the cleaning crew, we find most hosts or property owners, they really find out about a claim because the crew went in and they said, hey, like the sink is broken, this happened. I mean, they're really your eyes and ears on your property, daily. If you rent it out on a weekly basis, I mean, these are the people that know your property probably better than you do, because they're going behind the toilets. They're checking every corner to see what's going on. So cleaning crews are expensive in the South Florida market. They're not ridiculous, but a good reputable one is worth the money. I mean, tenfold. I know a lot of people that they have their they've been with them for years and they'll never let it go, because they really trust them. And in this business, trust is the most important thing when it comes to cleaning, when it comes to getting a loan, and when it comes to insuring your property.
Yeah,
um,
absolutely. And I would say that at the very start of your Airbnb real estate investing journey, when you're determining or kind of writing down what the goals are, what the strategies are, step by step, kind of checkbox. That's something we do, our real estate team, and as our mortgage broker, we sit with our clients and do a buyer's consultation or a client consultation, essentially. And we kind of have them write down all these checkpoints, and we determine most of these before the client gets into contract to buy. I want our clients
good.
to know exactly who your manager is. If you're someone that wants to buy a property and you're not willing to take on any projects, you don't want to remodel, but something has to be done to those properties, you better have a really good project manager that you can trust, right? So in our business, we meet a lot of people, a lot of different trades. Essentially, I have a very good friend of mine who is a general contractor. He is essentially my project manager. I'm very hands on. I like to do most of the work myself, but there are many times that the work is too extensive, and I completely trust this guy to go in there, tell me exactly what it is. He's not going to overcharge me. If something needs to be replaced, I know it has to be replaced. A lot of times, or sometimes, someone will come in and tell you have to replace your whole AC, when it was just I don't know, a fuse that needed to be fixed and so forth. So
Right.
have someone you trust on your team before you start investing in these properties. And And even so, you can start, hiring or interviewing your insurance agents, right? I'll leave Gerry's information at the bottom so you guys can reach out to him with any questions. But you should have a trusted insurance person that handles all of your policies. Don't spread out your policies between 3 or 4 different agents. When something goes wrong in one, you're calling the wrong agent, and that agent's like, "Hey, I don't have that policy." It's a little bit awkward conversation to have. So
Yeah.
make sure that once you identify a good vendor, you add them to your team and you keep them. Mortgage broker, real estate broker, insurance agents. You have your project manager, AC person, etc. But you want to have those set up before you buy your first Airbnb. There's going to be a lot of things going on during the process of buying. The last thing you need is to additionally have to do something else, which is
Right.
scramble to find all of these vendors because something went wrong on your property. So when it
And
comes, go ahead.
no, and I mean, since we're on the term of team, the more the team works together, also typically the more we all get to know each other and we get to see how we work, and the more streamlined everything is. So if
Yes.
this is your first Airbnb home, you should really try to use that same realtor, try to use the same lender, the same insurance agent, because the more we get to do business together, and the more they grow, the more we all grow and learning how everybody likes to get things done. If I know Mario likes his paperwork this way, then I know it's already going to be done that way with this much time in advance. So that way his team is smooth to go into underwriting. If the realtor knows that this is how Mario likes to get things done, then okay, they get their paperwork ready. We submit it all at the same time, and it's good to go, and it's an easy process. I talk to a lot of people on my follow up calls and just say, hey, how was everything? Is there anything else that you need? And sometimes they're like, man, you know what? Buying a house was like, I'm happy I'm in the house, but it was the worst experience. And it shouldn't be that way. It should be like a happy experience. It's full of ups and downs, right? Because there's always added paperwork or something misspelled, or you deposited $1 that you shouldn't have. And
Yeah.
and those bumps and bruises happen. But if your team works together consistently, we all know how to go through it because this is what we do every day and what we
Yeah,
specialize.
I couldn't agree more. Our team of realtors, when something goes wrong, no one panics. It's like, all right, this is what we need to do, guys. We've done it before. This is the way we handled it that past time. What do we need to do now? So yeah, that creating trust within your team is definitely something that you should be doing as you buy your first Airbnb. And ultimately, when you're buying your first property with the idea of doing an Airbnb, you don't have to you don't have to buy a multifamily to be able to do a Airbnb as well. You can, what we call, house hack, right? So you can buy a four bedroom, 2 bath property, and you can divide it. You can rent out, or you can rent out your a room on Airbnb. You don't have to only do a a multifamily to be able to buy a property for yourself, single family residence, buy it as a first time home buyer, and make that property work for yourself. Again, the fundamentals have to be there regardless of the property you buy. Fundamentals, again, going back to the beginning, you have to determine a good market that you're buying in. You have to know what goals you're looking for, your expectations. You have to know the average nightly rate of the comparable Airbnbs in the area. And as long as those numbers make sense, as long as all the fundamentals, check marks are checked, you can move forward as a first time home buyer and buy a single family residence, 3.5% down, and just rent out a room. I we actually have a client that they bought a property, large yard, and they're planning on putting in a tiny home on their backyard to rent out on the Airbnb. There's a few people in the area that are doing it, and they're getting phenomenal returns. It's a little bit up north, so the yards are bigger,
Yeah, they got more
and
land.
local ordinances allow for that. They call it an in-laws quarters. But he's coming in and building in a luxury tiny home, and the comps for the area are phenomenal. So he's going to essentially live mortgage free from right now. The moment he finishes that tiny home, he's mortgage free, right? So there's also a few other things that you have to consider when you're buying your first Airbnb property. So it's not it's not only, the area, the fundamentals, the numbers, check out all of that stuff. It's very important that you determine or you plan for your next property, because if you just buy that one single family residence, you use your first time home buyer 3.5% down, but you want to own three, four, five properties more without having to give 20, 30% down. How do you do it? And the idea is you have to plan, you have to structure and time your purchases correctly. What I mean is, with us, I can't speak for other lenders, but for us, as long as you're buying an upgrade from the property that you currently have, you can buy as a primary residence minimum down payment just 5% down. Right? So if you buy a condo as your first property, 1-1, you can buy a 2-1 on your next one, 5% down. Or if you buy a townhouse as your first property, you can now buy the next property as a single family residence, right? It's an upgrade. It's a quote unquote superior property on paper because you're going from a townhouse to a single family residence. So we only require at that point just 5% down as well. So if the plan for you, right, once we sit down and we determine what the goals are, the next 3 or 4 or 5 properties, we know that you can't immediately go buy $1 million property if you plan on buying 3 or 4 properties with minimum down payment. If you buy $1 million property, good luck buying another property that's considered an upgrade. You're going to have to buy an even more expensive property at that point to be able to do the minimum down payment 5% down. So what that means is, as we're laying down the strategy for you to buy the very first Airbnb property, we're also talking about your next 2, 3, 4th property to know how to structure and time your first purchase. So I wouldn't, if the goal is just to have one property, multifamily, you want to live on one side, rent the other, as minimum stress as possible. You don't want to have to deal with consistent project management. You want to do the minimum. Then, you just buy the most or the best multifamily that you can find, the one that fits your budget, that you qualify for, boom, and you go that route, and that's fine. But if you take a route where you're jumping ahead and buying the most superior or the highest and best property you can qualify for, you've essentially shot yourself in the foot, because any property that you buy after that that's considered inferior on paper, you're going to be required to buy it as an investment property with 20% down. So not only are you looking to plan for your first property, we should also be planning for your second and third in terms of down payment. Now, in terms of, once we get down 3, 4, 5 properties, Gerry, and I think we talked about this before, do you suggest what we call, or what you call, an umbrella policy, just to cover your assets in the event that you don't have all of these properties under LLCs or trust, etc.? Is an umbrella policy something that makes sense to cover your real estate portfolio?
Yeah, so an umbrella policy is typically just a very large. They start at 1 million, approximately. They pretty much go up to 5 million. After that, you have to apply for higher limits. Depending on where it is, though, we do have products that offer a high liability. For example, that one product that looks at your home, at your portfolio, but they give you the liability of $1 million for each home. So it's nice because it's like having an umbrella policy on every single individual home. Instead of only having 1 million for 10 homes, you have 1 million per home, no matter how big your portfolio is. And we can add up to 99 homes in that one policy with that carrier. So it's cool because it gives you a lot more coverage, really for the same amount of money. If you were to get a big umbrella policy and keep adding things, it'll just get more and more expensive.
Gerry, I
Um,
think your connection is bad. You're cutting in and out, and you're freezing. You're freezing like every other 5 seconds with a very funny face.
oh, really? Sorry.
No, no worries.
Is
You're frozen now. I'm gonna hide you on here, see if it resets. So essentially, guys, what I asked Gerry was, Whether it makes sense for someone that has multiple properties to have an umbrella policy. An umbrella policy is in short, a policy that covers what the other individual policies don't cover up to an amount. Gerry mentioned, a couple of $1 million. So it is a good strategy for someone that has two, three, four, five, and more properties. It's a good way to protect your real estate portfolio. So as you're looking to buy your first Airbnb properties, just to kind of recap here, number one, we have to identify your goals and the investment strategy upfront. We have to know if you're looking to buy medium to long term, if you're willing to do, any projects, any renovations, what kind of or what extent of those renovations are you willing to take on? We have to determine that upfront. That way, our real estate team is not showing you properties, fixer uppers that you just have no interest in buying. You have no interest in taking on those projects. So we have to identify your strategy up front. We have to also identify a market or in a location that you're going to buy in. Location is everything in real estate. You have to keep in mind also you're not buying a long-term rental property. You're essentially buying a business. So when you buy this property, wherever it's at, you have to look at it as a actual business and not as a rental property for 12 months out of the year. This business requires your attention more so than long-term rental properties. So you have to be willing to either hands-on manage this property or pass on the management to a property manager. So we have to know that up front. We have to know how many hotels in the area. I want to know the median income of people in the area. I want to know the average nightly rate for the comparable Airbnbs in the area. And kind of something that I look for too is I'm not looking for the cheapest Airbnb in the area, because if the market falls, the market corrects, I want to be the best property in the area after I've dropped my price a lot, right? So I'm not looking for the $1 million properties, but I'm also not looking for the cheapest one. I have to find that sweet spot where if all of the prices in the areas drop and I'm able to drop, I'm going to be the best of the low priced property. So then that my property rents the most or the fastest, right? So that's kind of one of those things that I must have. I cannot have the cheapest. I don't want the most expensive. I want that sweet spot property where if everything drops, I'm still the best in that category and mine will rent faster, right? And then from once we determine that location and strategy, we can then talk about financing options. First time home buyers have access to FHA loans. You can't buy condos with FHA loans, but you can do 5% down condos. You can buy multifamilies with FHA. You can buy single family residences and townhouses with FHA and house hack. We can go into house hacking, into more details at another video, but essentially it's just buying a property and putting one of the rooms on Airbnb, right? Making the property work for you. And once we have all of that, it's important that you get all of your vendors in place. Make sure that you have your real estate team, your cleaning crew. You have all of those check boxes checked off. Don't wait to closing for you guys to do that, especially if this is your very first home. There's going to be a lot of stress, a lot of things going on in, throughout the process, that the last thing you need is for you to have, or, to close, and then for you to have to now figure out who's doing your pest control, who's doing your lawn, who's doing all of those things. Don't wait to the end to do that. And then ultimately, once we have that buyer's conversation at the very beginning, we can determine a budget. We all know exactly, or very good estimate on how much you need for closing, how much you need for down payment. We'll know what the structure needs to be for you to buy another property and how soon you're going to be able to save up to buy that other property. You're going to already have some experience under you on how to create or get licensed for short-term rentals, so that the second and third properties should be significantly easier for you to do. So that's all I have for now. I mean, there's a lot more, guys, that goes into buying an Airbnb property, that goes into buying rental properties on their own, right? So it's very intricate. It's a beautiful market. It's a great hedge against inflation. In my opinion, real estate is the very first stepping stone in an investment portfolio, and then from real estate you can build on other things like stocks. You can build on crypto. You can build on art, etc., etc. But real estate is the cornerstone of every portfolio, in my opinion. So I think Gerry's back on. That's all I have for now, guys. And let's see if Gerry's mic is working again.
Yeah,
Hey, Gerry.
I'm here.
So we're pretty much done, man. Anything you want to say before we get off?
No, I mean, I just wanted to thank you for the opportunity. Thank you for the conversation. I think you brought up some good points, and to give either one of us a call, and if they have any questions, I know we work as a team already, but we'll be more than happy to help them do good and build a strong portfolio of real estate investment properties, whether it's long, short term, it doesn't matter.
Yes. And your camera's still not fixed. By the way, you're still frozen. That's it, guys. That's all we have for now. Remember, don't wait to buy real estate. Buy real estate and wait. With that, I leave you. Be safe, guys.